All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. Starting off with the SP 500 here, we see we had a nice week again, another rally, and markets really kind of just floated straight higher over the past week and a half or so. Volume declining significantly here, so it's more reminiscent of a month of, say, August or some type of holiday week like Thanksgiving, 4th of July, that type of nature. There has not been a lot of participation, but market's able to rally higher nonetheless, and almost getting a little bit complacent here. But I do think there's a little bit more upside in this market. I think we get through that that double top. We did have a little bit of sellers come in on Friday. We had some taper talk from Powell, just some jawboning and so on. But I do think we get a little bit higher and make a new nominal high here on the SP 500. And I think November is the month that we have to be a little bit careful with here moving forward. I do think we see a little bit of selling in the S&P here and in the broad indices. But outside of that, let's take a look at tech here. So tech has been the weak link. We're looking at the NQ futures here. And on a weekly time frame, we still held through this sell-off bar here from the 27th of September. So this weekly candle, we are still inside of there, as well as on the semiconductors. So semiconductors also lagging the market here, although they have had a nice bounce off the lows. The real strength in tech has been in cloud software, the IGV, Microsoft, Adobe, which had a major sell-off but has rebounded nicely, and Oracle are leading that ETF higher. So cloud software holding up really well here. Areas that are doing well in the market right now, specifically like the Dow Jones Industrials, energy and so on, and that has helped up XLF. XLF. So financials doing well. Obviously, that is helped by the higher yield. Now we've been talking about yields for quite some time here, and I believe we're getting close to breakout here on the 10-year yield. I do think we have to pull back a little bit and do some backing and filling. We have this trend line here. You could say inverse head and shoulders, cup and handle, however you want to call it. But I do think we back off of that a little bit here, and that probably gives tech a little bit more of a bid. That said, earnings have been terrible here to start off earnings season. Intel getting smoked yesterday, as well as Snapchat. That is hurting stocks like Facebook, Google, and so on. And so we have FANG next week. We've got, Google, Amazon, all the big ones. Speaking of which, Amazon tried to come up and fill this gap, and that rolled over on Friday again. So the Snap earnings really spooking investors going into the weekend here. But we'll see. The big names report next week, and anything that happens before that is posturing. So these big tech earnings can be a make or break move for the market. So we'll see what the reaction is to that. Moving on here, some strength in the market outside of energy and financials. We have the transports here. So transports really ripping higher here. They probably do want to test that double top. They'll probably make a new nominal high as well. Although after that, I'm not sure how much upside is in them. But it's important to note that the transports are holding up for now, generally led by the rail stocks. So CSX ripping higher, Norfolk Southern, we have Union Pacific, all leading the charge higher here. The one area that has been weaker in the transports has been the airlines. As you see the JETS here, the jets, really getting back into that range that we were stuck in really from July all the way to October. Southwest also weak, JetBlue, United. United had a decent pop of earnings, but hasn't done much since then. So the airlines are under pressure here as far as the transports are concerned. Now, if we flip over to energy specifically, let's take a look at crude first. Again, nothing really has changed here. It's kind of just grinding higher. It's not ripping by any means. It's not pulling back, but just kind of grinding higher. We see that 85 level. That's really that upper trend line is what I'm really watching for on crude here in the near term. And then I've talked to you guys about this. The monthly, I think your major resistance here is at $90. So that's where the next big resistance area is. But it is noteworthy that crude is getting pretty overbought on the bigger time frames, the weekly and the monthly. So the more extended it gets, the more that $90 area becomes a major resistance point if we can trade straight up into that. So just be aware of that. And by the way, a lot of this is really just panic buying In fact, if I could show you, we'll flip over to trading view here. So look at the tin futures here. So China is having some serious energy problems right now. If we look at last year, they're trading about 15,000. So we've doubled since then. And really the last 18 months or so on tin futures. We also have thermal coal, which has absolutely gone parabolic. Again, since last year, you're looking at over 400% gains right now. So this is serious panic buying going on, mainly led by China, but energy just continuing to push higher here. The one area I think has slowed down a bit is Nat Gas. So Nat Gas getting a nice bounce off the 50 moving average here on the daily time frame. Still inside of this red bar here, the sell-off bar from Monday. However, I do think Nat Gas probably pushes up to that 550 area, maybe a little bit higher. Maybe you get up into the 560s there, but I do think Nat Gas probably rolls over and tests this lower trend line here, maybe this 100 moving average. I think Nat Gas has topped out in the near term. I know pretty much the news right now is all bullish for energy and Nat Gas, but a lot of that I believe is priced in. I mean, a lot of talking heads are talking about it. It's no secret right now that energy prices are going to be under pressure, and they're going to be more expensive going into the winter time. But I do believe a lot of that is priced itself in, as Nat Gas has come back in, and where we look at crude and the XLE and everything else, they have continued up. So I do have some buy levels worked out on Nat Gas here for a swing trade, but we're not quite there yet. I think this bounce here will be somewhat short-lived, but nonetheless, energy just continuing to push higher pretty much across the board. Outside of that, the XLE, XOP, OIH, nothing really wrong with these uptrends, and they're still intact and still continuing to grind higher. I have no sell signal on crude right now or any of the energy names, so they can continue higher in the near term until they give us a sell signal. So until that happens, they can hold up. Let's move on here to precious metals. So let's talk gold first. So gold actually showing a little bit of strength here finally. Every time gold has a rally, they just smack it down. They smack down. We tried to rally back up here. We got this beat down. They beat it down again. We tried to push up, and then they sold us off last Friday. But gold finally finishing the week on a strong note. So that is nice. We did have a lot of volume here, so sellers did step in a little bit. And there is resistance in here, so not to be, it's not unexpected. The level we're watching here on gold, I think I pointed this out last week, nothing's really changed. But this 18.1060, so we'll call it 18.11. If you can close above that on a weekly time frame, gold probably goes right up to about 1060, 1070. So you go up to test this, the high of this bar here. So that would be a 3 or 4 month high for gold if you could do that. But it's still below the moving averages. It still hasn't really been able to sustain a break, but it has shown up a little bit better here over the last couple of weeks. And I mentioned this last week as well. GDX, GDXJ looking much, much better. Same thing with SILJ, getting off the lows nicely. So when the miners lead the metal, that is a good sign. Also, with higher yields have really pushed up since the end of September, and gold has been able to stay off the lows. So, it's nothing too major yet, but if this correlation breaks down and gold starts going up with yields, that would spell major problems, because that would suggest that yields are going up not because of growth, but because of inflation and because of fears. So that would not be insignificant if that were to happen. So that is something to monitor. So let's move on to silver here. So silver is shaping up much better. This ended up looking like a fake breakdown here. So silver looked like it was dead in the water, and they reversed it. And it's now up into this pivot. So the 100 moving average, you have this pivot high here, around $25. I think that if it consolidates a little bit more, it's going to have to, work off this little short-term overbought condition, and it's got some resistance here. But if it can consolidate, it can push higher and probably retest this trend line here. Let's take a look. So these trend lines here are where we broke down from, and that is naturally where you would want to, or silver would want to go in the near term. So that would be your major resistance. So you got the 200 moving average there. This is where you broke down. This is where you broke down, and this is the trend line. So I'd say 26 would be your next major area on silver if it can push higher. But silver's shaping up nicely here. And platinum as well. Platinum pushed higher than I thought it was going to. I thought we'd stall out around 1030, but again, nice little move there. It's above the 100 MA, and it's just continuing to consolidate. It's going to have to consolidate a little bit more to get through all this chop, but if it does, it can push higher, and maybe you get through that 200 and maybe get up to 1050. So that would be your bull case there on platinum. And palladium, a little bit softer, but this was really oversold. It got really overbought in the bigger time frames, and then really oversold short term. Nice pop off the lows, and it's trying to hold that 20 moving average, but there was a lot of sellers in here. So again, more consolidation is needed on palladium, but metal's shaping up much better in the near term. And if we get a nice pattern on some of these, the SILJ, for instance, we played AG a few weeks ago. We may look to do that again if they can continue to shape up here. And the inverse of the metals here, let's take a look at the dollar. This is the one thing that keeps me a little bit from getting too bullish on the metals in the near term. The dollar has a nice bullish pattern here on the weekly time frame, and I believe if this 20 moving average can start to catch up to price and we can consolidate, the dollar will go up. It probably gets up to that 97 handle. Now, there has been time periods where gold and the dollar go up together, typically when there is fear in the market. Hence why I was just talking about gold and yields going up. So that is a possibility, but just please note that these generally are short-lived, these sort of panic spikes, and they are not too common, but they do happen. So that is something that we can definitely keep an eye on. It's something we'll watch for, but the dollar is holding up really well here. And we'd be also remiss if we didn't talk about Bitcoin. So Bitcoin pushing through this 67,000 area, getting through the double top, and now pulling back here. I tried to get some shares to short this for a quick scalp, and I couldn't even get shares on pretty much anything. There was Mara, Riot, MicroStrategies, Grayscale, the new BITO. All of these things were restricted and on the hard to borrow list. Bitcoin coming through that double top and pulling back, and now testing that $60,000 area. So short term was a little bit of overbought condition. In regards to the commitment of traders, retail added a ton of money to the long side on Bitcoin, and we did have some commercial money move away from the long side, although they are still both net long now. So just something to keep in mind here. We are seeing a little bit of institutional selling, and we're seeing some retail FOMO at the moment. Does it mean Bitcoin can't go higher? Does it mean it can't push up? I think the next resistance area I have is around 72K if it does continue through this double top. But just be careful right now with Bitcoin. There's a lot of FOMO going on in the crypto space right now, so just always be careful when you see those types of things. And then lastly, we'll just quickly go over uranium here. So nothing too eventful happening, just kind of chopping. We talked about the double top last week, and we've really just kind of been range bound this week. So we're looking at Camco here. The URA, same kind of deal. Had a nice gap up and then pulled back a little bit into Friday. And same thing on the URNM. Nothing really too significant here going on. But again, if it can consolidate and work off this overbought condition in the short term, and they can possibly get through that double top, I personally think uranium needs to do a lot more consolidating before it makes a real move higher. But you never know what can happen when they when you get a major short squeeze, and that is what Sprott Physical Uranium Trust is essentially trying to do in the market. So we'll just have to wait and see there. But yeah, uranium just kind of holding this double top at the moment. But anyways, guys, going to wrap it up here. Take care. I will talk to you next week. We'll be watching those FANG earnings very closely, and they will be market moving events. So be on your toes for that. But anyways, guys, take care, and I will talk to you later.